I've been really thinking about doing a day in the life video because I really love watching those myself. But for this video, I may not take you along the whole day that I'm having, but for a specific moment. That's actually one of my favorite moments in the week, and that's the moment when I do my weekly stock purchases. So I do this once a week, every week actually for quite a while now. I really try to dollar cost average. Basically, I invest the same amount into a couple of stocks that I own, mostly dividend growth stocks, and do that every single week. Now, the only difference here is I don't have a fixed date in the week. Now, that's the true meaning of dollar cost averaging, where you have the fixed date every single week. Some people even like to automate and set it and forget it, and it's just being done automatically. But I actually do enjoy the process of researching my stocks a little bit, do some homework, see how the companies are doing, and just to kind of keep up to date with the markets. So basically, you could say in the macro, I'm really dollar cost averaging every single week. When I zoom out, I really do my weekly stock purchases, but in the micro, so to say, within a given week, I try to time at least within the week a single day. Because in the beginning, I used to buy every single Monday, but I realized sometimes waiting until Tuesday or Wednesday, I would actually end up with slightly better prices. When the markets go into the red, I can get a little percentage here and there on some of the stocks I have. So it's my way of playing and timing the markets a little bit. But worst case, if I don't find a stock until Friday, I will still buy on Friday. I think there was 1 or 2 weeks so far that I skipped it because even on that Friday it was up by 4 or 5% maybe the market. So then of course it would really be painful to buy. But if it's up a little bit in the green, I would still usually try then worst case on Friday if I didn't see any opportunity before. But looking at the markets today, it's very much red. So for me, that's always a nice buying opportunity. And therefore, I want to take you along the journey, how I do it, how I buy it, where I buy it, and how I track it. So with this, let's get started. So if you've been watching my videos before, you probably know by now that I use 3 tools the most to do my stock purchases. Number 1, to do all my stock research, is Seeking Alpha. I really love the platform. They have a free plan, but also a paid plan, which gives you even more insights. And the great thing, it directly links to my broker. As you can see over here, already it's linked to my interactive brokers. So that's real data from their actual holdings. If I click over here into holdings, you can see the amount by value, by day change. If I sort it by here, you can see basically my full portfolio. And today I'm actually down 455 euros. So that's quite an amount, but at the same time, it brings a lot of buying opportunities. So I really love that platform. It really has some great analysis, historic data. So for me, I really love it. And if you haven't tried Seeking Alpha yet, then use my link in the description below and you'll get $50 off. So with this, let's go back into my view. So I built my own view, the things that I like to see. And some of the things are, of course, the daily change. So how are they performing right now? Most of my stocks, as you can see here, are listed in the US. Right now, the stocks are open. So you can see here the live numbers rolling in. As I said, most of it is pretty red, which is already nice to see. Same time, also, I look at the 52-week range. That's an indicator over the last year period. Are they right now at the top of the price that they had for the last year or at the bottom? So that's also a good indication. I usually don't like to buy something that is at the top of it because most likely they're going to be resetting sometime soon. When I look at Google, even though they've been coming down in recent times, they're still over the last year actually very much towards the top of it. So chances are that probably they might be receding a little bit in price sometime soon. So I'd rather wait a bit more if I wanted to buy them. But actually Google at this stage does not pay a dividend. So for me, it's not that interesting because I really want to accumulate a higher position in dividend paying stocks to start getting that sweet passive income every single month. These are the stocks that I have in my portfolio and I like them already. I've done my research. I do have another watch list where I have some other stocks as well. So occasionally I look at them as well. But to be honest, I don't want to have too many stocks in my portfolio. Right now you can see it's really manageable and I like that. I don't want to have too many stocks because that's going to be really difficult for me to keep up with all those companies. I mean, by owning the S&P 500, the 500 biggest companies in the US, naturally I'm already diversified. So the rest, I really want to focus mostly on US dividend paying stocks. And yeah, for me, I'm really happy with them. I might add 1, 2 in the future, but for now, I'm really happy with the stocks I have in my portfolio. So when I look at it over here, obviously I can sort by change to see what dropped the most over here. And yeah, I can see, for example, Blackstone dropped a lot, but Blackstone actually had one of my highest gains this year. I bought it actually for way less and I'm actually substantially up. And you can see right now, it's towards the high range of 52 weeks. So honestly, despite a little reset, I think they really gained so much this year already. So for me, I'm still waiting and seeing on that. Now, BlackRock, on the other hand, that's a nice job and that's such a strong established company. So for them to drop 2.25% in a day actually makes it quite attractive. They're slowly getting back to 3% dividend yield, which makes it more attractive. Usually that's my threshold. I want to invest only into stocks with more than 3% dividend because these days I can get 4% interest on my cash. So why would I want to get less dividend? But BlackRock is such a strong company and right now they're a little bit under scrutiny. If you go on TikTok and other social media channels, there's a big backlash against BlackRock, who are supposedly running the world. Obviously they have ownership in a lot of companies through their ETFs, but that doesn't mean that they directly control the world. But anyways, that's the narrative that's being put out there. And I think that puts a little bit price pressure on there as well, which, is attractive as an investor. to build an even bigger position because I really think long term, I really can't see the company struggling. On the contrary, I really think they're going to be growing very nicely. You can see here the dividend growth over the last 5 years, 11%, and dividend growth over the last 13 years. So really substantial numbers over there. And secondly, realty income is really dropping big time, almost 2% on the day. And obviously that is impacted by the rising interest rates and mortgage rates around the world, makes it more expensive to borrow money and therefore hindering growth, etc. So yeah, they're really dropping big time. They used to be over $60 and I bought them even in the beginning at $60. So now that they're down $52, I mean, for me, it makes it quite attractive because again, I'm a long-term investor. I don't care if they're dropping right now. Yeah, technically I'm losing money on them for the time being, but at the same time, I'm getting a 5.63% dividend yield, which is way higher than the interest I'll be getting on a bank. And yeah, long term, I don't think real estate is going to go anywhere but up. So I'm definitely very bullish on that company. And yeah, I already made my decision just looking at it. As you can see, I don't really try to do a PhD out of this. I look at the numbers, the companies I like, where I like the fundamentals, see what has been dropping on the day. And if I see a great buying opportunity for a company I like, I'm just going to go for it. Right, with this, let's hop over to my trusted broker of choice, Interactive Brokers, where I'm going to do the actual stock purchase. So here you can see my portfolio as it is currently. Nice to see for the year-to-date performance, nicely up as you can see. Now, obviously, that includes cash addition that I made to the portfolio. It's not just pure performance. I wish I was such a gifted trader, but again, it just shows the long-term accumulation and compounding of my portfolio, which is starting to kick in. So in order to make a stock purchase, what I want to do is go to my portfolio. Obviously, I already have those stocks in my portfolio, so it makes it easier to buy them. And you can see here, those two positions that I'm planning to buy, BlackRock and Realty Income, are already some of my biggest positions for a reason, because I obviously love the company and I want to have an even higher position in them. So let's start with BlackRock. As I said, I want to buy them. I just click into it. From here, you could do even more stock research if you wanted to. Let me just make the image a little bit smaller so you can see everything. They have great research tools over here as well if I wanted to go. But usually, as I said, I prefer doing it on Seeking Alpha. I'm just so used to the interface and the graphs they have, so it's really good. But yeah, if you don't have Seeking Alpha, you could do your research over here. But in my case, obviously, I've done that before and I've done separate videos how I analyze companies, so you can watch them and follow my logic, how I go about that. But yeah, basically, as I'm happy with that, I can click on buy over here. So basically, my template is set up already because I usually buy 2 stocks at $250 each. And that's already pre-populated over here. The dollar amount, I could buy also shares, but then it's a little bit more difficult. You have to calculate, how many shares cost you how much. So I like to have it set and forget it, easy number, $250. And yeah, if I'm happy with this, I can click on preview over here. It shows me the commission. You can see here it cost me 35 cents, which really, it's so cheap actually. I mean, there are a few brokers out there that are completely free of charge, but generally it's one of the cheapest brokers you can possibly find out there. And yeah, I'm really happy with this, how many shares I will be getting for that. And yeah, happy with this. Override, transmit. As the markets are open, boom, the order has been fulfilled. All right, with this, let's click on done. I'm good with this. And then I'll go back into my portfolio to make my second stock purchase. You can see already a blue dot indicated that I bought BlackRock, and there's a new addition to this. Now I go into O, which is Realty Income. So that's the second stock I want to buy for this week. As I said, I've done my research. I like the stock. Yes, I want to go ahead, buy some more. Click on buy over here. And once again, you see here, the quantity is in US dollars, 250 already set up, which will give me around 4.7 shares. Yep, sounds very good. I click on preview. And I will see here once again, between 34 cents and 36 cents. So really, really attractively priced. They obviously put this on top of the total pay, 250 plus the commission. So 35 cents on top of it. And yeah, I'm very happy with this. Override, transmit. And it will take a second. Again, stocks are open. Markets are open. And boom, I just own some more Realty Income. And my dividend income therefore grows accordingly. So that's really nice to see. I'll show you in a second how that's really rewarding every time you make a stock purchase in a dividend growing company. Immediately that annual number that you get and projected dividend income will grow as well. So that's really the whole fun for me and why I love doing this every single week. All right, so let's exit out of this here. Go back into my portfolio. So from here, if you go into trade and then orders and trades, you will see your most recent orders. And I can see here all the trades that I've just done. BlackRock and Realty Income are right there with the total amount and the transaction fee. I'm happy with this. Now, obviously, I love interactive brokers, but some things they're not really showing as nicely as I wish they could, especially tracking your dividends, when they're being paid to you, how the dividend is growing over time. And for that, I use another tool called Dividend Watch, which is this lovely website over here. And that pretty much mirrors my Interactive Brokers account. It has 2 options. One, an automatic tracking. It does integrate with Interactive Brokers account as well, but it doesn't pull all the historic numbers. So if you want to see the full picture, then you have to do manual import, but it's very fast. And I've done another video where I showed you how the process is done. It literally takes you a matter of seconds. So this is basically how it looks. And now just remember that number over here. It shows 778 euros of annual dividends that I'll be getting currently as we're speaking. Now I will add my stock purchases that I've just done to to the portfolio, and you will see how that number goes up. So let me do this very quickly, and I'll see you in a second with hopefully a higher number. Right, so it literally took me less than 2 minutes. So as you might remember, the number was 778 just a second ago, and now after adding it, my annual dividends grew to 799. So basically 800 euros annually in terms of dividend income. So by doing my weekly dividend purchasing, I added myself 21 euros to my annual income. And obviously that's just a starting point, because those dividends will naturally grow over time. Usually companies grow their dividends over time rather than shrink them. So what is 21 euros now, in the future might be growing to 30 to 40 euros. Plus, of course, the fact that I will reinvest the dividends, and that will start to expedite the compounding process. As you can see, really straightforward, nothing overwhelming. I really enjoyed it. In total, that process takes me less than 30 minutes. And most rewarding for me personally is seeing that annual dividend number growing. Because if you buy tech stocks, these things fluctuate all the time. While sometimes your Tesla stock might be up, but you don't sell it, it goes down again. So it's kind of up and down, and unless you really sell it and take the profit, it's just a theoretical number. Versus this dividend is actually paid to me every single month from different companies, and that's actual money that I receive as a shareholder. And for me, that's just so nice to see that number growing. Obviously, it's still a tiny amount, but eventually that number might grow into a 5-figure number, and one day, if I stick with it, into a 6-figure number. It may not completely pay for my retirement, but definitely it will start contributing a significant part later on in my life, which is really nice, at least to have this cushion of security there. Next up, check out this video over here. As always, guys, thanks a lot for watching. Stay healthy, get wealthy, and I'll see you in the next one. Ciao!